Is Micron technology the next Nvidia? What do I mean by that? Not that they are going to make GPUs, stuff like that, no. But is Micron technology right now at the same stage of their growth cycle as Nvidia was just a year or so ago? More recently, they reported their latest earnings report. Great numbers for the quarter and for guidance as well. Stock went up 15% or so. Now, if we currently look at the state of the stock and the company, one share will cost you $110, market cap $122 billion, a forward PE of 24.5 times. As you can see, despite the stock being up quite a lot, the forward PE has dropped a lot. We've seen that with Nvidia as well. That's because the business suddenly is accelerating top and bottom line much faster than what the stock is reflecting. Now, with regards to companies like Micron, like Samsung, not like Samsung, but Samsung also deals in the memory side of the semiconductor industry, it is a very, very cyclical business. So yes, sometimes you will have those stages. This was, of course, after the pandemic, but sometimes you will have those stages where profitability gets thrown out of the window, and then you're going to go back to a growth cycle, which in my opinion is what we're going to experience, or what we are starting to experience right now. We can also see this in the analyst estimates for the coming fiscal years. Fiscal year 2024, sales growth of 55.73%, EPS 59 cents. You don't see a growth percentage here year over year because last year that was negative. But then in fiscal year 2025, another 40.5% growth year over year for sales and a 1,162% increase in EPS. Then moving to fiscal year 2026, we only get 10.6% growth year over year for sales, but another close to 30% year over year growth for EPS. This is what I'm saying. Maybe Micron is entering that growth cycle that Nvidia has experienced a year or so ago. Of course, different companies, different businesses, but with the huge refresh cycle that we're about to experience for the consumer, for the big tech companies as well, with the new data center chips, stuff like that, AI applications, I do think that a company like Micron is definitely going to benefit from that. I'll explain throughout the video why and show you what the company has reported as well. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we'll really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. I'll start off with a comment from the CEO. So it says here, our premium product portfolio positions us well to deliver a strong fiscal second half of 2024. We believe Micron is one of the biggest beneficiaries in the semiconductor industry of the multi-year opportunity enabled by AI. He already gives us here a couple of hints saying that he sees this growth continuing for a couple of years. They even gave us a bit more information in the earnings call, which was pretty nice to hear. Now I'll first start off with the highlights and then we're going to jump into the earnings call. So revenue for this quarter came in at $5.8 billion. That's up 23% quarter over quarter and up 58% year over year. As for the performance by technology, they have DRAM and NAND. So DRAM came in at $4.2 billion, representing 71% of total revenue. Revenue increased 21% quarter over quarter, and ASPs increased by high teens quarter over quarter as well. Bit shipments increased by low single-digit percentage quarter over quarter. As for NAND, $1.6 billion revenue, representing 27% of total revenue. Revenue increased here 27% quarter over quarter. ASPs increased by over 30% quarter over quarter, and bit shipments decreased by low single-digit percentage quarter over quarter as well. Now, for those of you that need a small, let's say, introduction class, the semiconductor industries get split into two segments, let's say, the logic and the memory. Logic, you've got players like Nvidia, AMD, GPUs, CPUs, stuff like that. These type of chips perform logic functions, processing bits of information, ones and zeros, to transform inputs into outputs. They don't have any capacity to store this information, they simply perform operations on it. Then you've got the memory chips. They store information so the logic chip can easily fetch data and perform operations on that. Then more specifically, with regards to Micron's memory division, they're segmented by DRAM and NAND. Since I like video games, I'll use an example of a video game loading screen. So this is what happens when you've got information memory that is transferred from an SSD to DRAM. To save the data from previous game sessions that is transferred from DRAM to SSD before the game turns off. This is why you usually have to save your game before you're powering off. Now, the trade-off between DRAM and NAND is in memory latency. In other words, how long it takes to process to fetch the bits from memory. And I would like to mention also that this is a heavily cyclical segment of the semiconductor industry and not as easy to ramp up and manufacture as CPUs and GPUs. Then moving on to the revenue by business units. So compute and networking increased 26% quarter over quarter and 59% year over year. As for mobile, that increased 24% quarter over quarter and 69% year over year. Embedded 7% quarter over quarter, 28% year over year. And the storage one, 39% quarter over quarter increase and 79% year over year. As for non-GAAP operating results, gross margin came in at 20%, operating income $204 million, net income $476 million, diluted earnings per share of 42 cents, and cash from operations GAAP $1.2 billion. Same quarter last year, these results were negative. From fiscal year 2021 to fiscal quarter 2 of 2024, they returned $5.3 billion to shareholders from repurchases and dividends, including $4.1 billion used to repurchase 60 million shares. Then as for guidance for Q3, they expect revenue to come in at $6.6 billion, gross margin 26.5%. So you're seeing here increases year over year and quarter over quarter, diluted earnings per share at 45 cents. The market was, of course, very happy with that guidance. Now, how come that guidance is so good? Again, this is because of the refresh cycle and the positive impact of AI. More recently, we've obviously had the news that Nvidia announced its next generation Blackwell GPU architecture-based AI systems, which provides a 33% increase in HBM3E content, continuing a trend of steadily increasing HBM content per GPU. And HBM means high bandwidth memory. Now, they also say here that their HBM is sold out for calendar 2024 and the overwhelming majority of their 2025 supply has already been allocated. This is again going back to my point I made at the start of this video. This could be the same stage of Nvidia's growth of last year, but this time for Micron. They also told us that they project to end fiscal 2024 with low double-digit percentage less wafer capacity on both DRAM and NAND than our peak level in fiscal 2022. As discussed previously, the ramp of HBM production will constrain supply growth in non-HBM products. Industry-wide, HBM3E consumes approximately 3 times the wafer supply as D5 to produce a given number of bits in the same technology node. With increased performance and packaging complexity across the industry, we expect the trade ratio for HBM4 to be even higher than the trade ratio of HBM3E. We anticipate strong HBM demand due to AI, combined with increasing silicon intensity of the HBM roadmap to contribute to tight supply conditions for DRAM across all the end markets. This is basically one of the orange flags or things to watch out for. It's great that one side of the business is suddenly, seeing increased demand, increased pricing as well, momentum. But on the other side, it might or it is currently hurting the other side of the business. This is what a couple of people have already told me on X. Yes, the company is now in a growth cycle, but it is a growth cycle that is also coming at a cost of some parts of their own business. So it's a trade-off right now, remains to be seen. Currently, I do still think that there are more tailwinds than headwinds. And so if we look at the stock itself, it is now higher than its peak back in 2000, July 2000, the dot-com bubble. It took them 24 years to go over that all-time high. Now, looking at it more recently, you can see that here 2021, 2022, a double top. Then we went all the way back down to around $50, found some support there. You might say that this might be a cup and handle pattern forming, which is very, very bullish, which also means that the stock might go down a little bit. But I mean, as we've seen with Nvidia, stock goes down for not that long and then it continues its way up and up and up. For those interested, the 200-day moving average sits at $77, the 50-day one at 88.2, and the 20-day one at $92.21. RSI on the weekly is now officially overbought. So, to conclude, great quarter, great guidance, great momentum for this company. I do think that we're going to see some Nvidia type of movement in this company and in this stock. The thing here is that you have to time it, not to perfection, but you have to time it much better than Nvidia. Because like I said, this is a heavy cyclical business. So don't be greedy when you go on your way up, because the way down can be also very fast. So that will be it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.